Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Japan leads a rally in Asia as its chief trade negotiator says US tariffs won't be stacked. Meanwhile, gold spikes in New York on reports that bullion is set to be hit with import levies. Elsewhere, Israel's military prepares to storm Gaza City after a 10-hour cabinet session approves plans for a full takeover. And Donald Trump says that he's willing to meet Vladimir Putin even without the leader of Ukraine. Oil heads for its biggest weekly loss since June. A very good morning, everybody. Happy Friday. We've got a lot of geopolitics to get through in this programme. But as it stands, we're looking at futures standing both higher on both sides of the Atlantic, in Europe and stateside as well. The equity rally taking a bit of a breather on Wall Street yesterday, but still floating around record highs as we look towards the Wall Street Open. In your Asia session, it's this optimism on the trade talks between Japan and the US that's lifting the broader MSCI Asia Pacific Index. But I've pulled out the Nikkei here because it's actually up 1.9% at this point in the Asia session. Flipping over to the cross-asset picture, and we've got Treasury yields pretty steady at the moment at 372. Of course, we had that hawkish cut from the Bank of England yesterday. No surprise that they cut, but it was the vote split that really was the surprise, going from a three-way split to a two-way split, the first recast vote in the panel's 28-year history. And so you saw the pound lifting off the back of it, but 134 is where we trade at the moment. So frankly, not that different from where we were before the decision, and actually a little in the red this morning. Looking at Brent, we're at $66 a barrel here. Oil set for its first biggest weekly decline since June, as I say, and tenterhooks ahead of that Trump-Putin meeting that we've been promised. And then we have gold here, higher when it comes to the futures picture, but weaker when it comes to spot gold, and that disparity coming down to the FT report that there are going to be tariffs from the US on imports of Swiss gold bars. We're going to dive into all of that throughout the programme, but I want to start in Japan. Tokyo's top negotiator saying that the US has confirmed it will end the stacking of universal tariffs on Japan and cut the car levies as promised. For more, let's bring in Bloomberg's Jill Desis, our senior desk editor. Morning, Jill. Just talk us through how soon this is likely to happen.
So I think at this point, it's a bit unclear. It seems that, the expectation is that maybe something would happen relatively soon, that it would not be a period of months. But I do just think that when it comes to Japan and, how a lot of these tariff rules have kind of unfolded, it does kind of point to quite a bit of uncertainty, some confusion. Obviously, Japan went into, this latest tariff deadline thinking that it was going to have, the vast majority, if not all of its tariffs sort of reset to that 15% figure that it agreed to with the United States. But I think that this kind of shows you that when you don't have everything written down on paper, when, there's not, something kind of laying that out, it does apparently lead to some confusion. There's still, I think, also in addition to just sort of like that blanket percentage, some questions about what happens with the auto tariffs, because Japan has also been under the impression that its auto tariffs would also be kind of reset and wouldn't face that 25% tariff that the Trump administration has applied more broadly to the sector. Again, I think still some sort of hashing out to be done there. From Akazawa, the trade negotiator, it does seem like maybe they're going to get that resolved at some point. But obviously, still some time to kind of flesh some of these things out.
You can see the relief for the automakers in Japan there on your screen. But let's also just turn to Switzerland. The FT reporting that the US has added this surprise in terms of gold bar tariffs, Jill. Where does that leave the US-Swiss trade talks more broadly and that 39% tariff?
Yeah, well, Lizzie, I think, if that ends up being the case, that there's a separate tariff on gold, I mean, certainly I think would, cause a snag in any kind of negotiations between the United States and Switzerland. Obviously, gold being a significant export there. What the FT is reporting here is essentially that there's some kind of a Customs and Border Protection ruling letter that details, that gold is subject to tariffs. Obviously, I think still need a little bit of detail there. But yeah, I mean, when it comes to Switzerland more broadly, obviously that 39% tariff was incredibly unwelcome, much higher than what we've seen, on a lot of other industrial countries here. And again, I think as what you're seeing with, not just Switzerland, but also as we've been talking about Japan, think about other nations that are still trying to, negotiate different tariff deals, India, for example. It really does kind of show that, we do have these deadlines in place by the Trump administration, and in, many cases, tariffs are often already in effect, but there still could potentially be some room to negotiate lower. I think it's just a question of, how exactly these countries ultimately, make that happen. I think in the case of Switzerland, obviously several concerns that they have, not just for gold, but also for goods such as, pharmaceutical goods, that are still on the table here. Lots to be resolved, and really does kind of indicate that it's really, really, really difficult to wrap up these types of really intense, complicated trade negotiations within just a matter of months.
All right. Well, thanks for trying to help us do that. Bloomberg's Jill Desis across all the latest on the trade talks. We thank you so much. Have a great weekend, Jill. Now, staying with the latest out of the White House, Donald Trump has named Stephen Miran as a temporary Fed governor, replacing Adriana Kugler until her term ends in January. Let's get more from Bloomberg's Valerie Teitel. Val, just talk us through what we know about Miran and how maybe he's likely to vote.
Well, he'll likely be quite a dovish candidate on the Federal Reserve governor, that is for sure. He is a longtime economic ally of President Donald Trump. He served under President Trump in his first term as the U.S. Treasury economic advisor. He's also been a key proponent of this tariff policy, Lizzie. He's been the one who's been really pushing the idea that it's the surplus country that pays the tariff, the exporter that pays the tariff, rather than the U.S. He's also wrote that paper on the Mar-a-Lago Accord, talking about the need to have a weaker dollar in order to help this manufacturing renaissance. There is one other thing, though, that could possibly point to, Lizzie, that this is more about than just a dovish pick to the Federal Reserve Board. It could also be a message on Federal Reserve reform and Federal Reserve governance. He co-authored a paper back in 2024, March 2024, at the Manhattan Institute, the title of that being The Reserve of the Federal Reserve Governance to Deliver Better Outcome of Monetary Outcome. So this is an important factor here, Lizzie. He has been a vocal critic about the Federal Reserve on many, many fronts. You just flip on, I can point out some key facts from this paper. He not only wants the Fed to have less of a role when it comes to crisis response, he also wants the Fed to have less of a role when it comes to banking regulation. So all in all, Miran is a big proponent of having a smaller, less powerful Federal Reserve.
Okay, really interesting. So it's not just about being a dove. So that would be in the short term, till January. But in the longer term, we're also hearing, Val, that Christopher Waller has emerged to become the favourite as the next Fed chair. We had Stephen Miran actually on Bloomberg yesterday, and he was speaking about Waller before his own nomination. Let's take a listen.
I think that Governor Waller has really built up a really impressive track record, not succumbing to the tariff derangement syndrome that many others throughout the country, but particularly at the Fed, seem to have succumbed to. And he's done a really good job having an independent voice, which I think ultimately is proving correct.
So, Val, specifically, what does the president seem to prefer about Waller to the Kevins, Walsh and Hassett?
Well, the one thing about Waller is even all the way back going to February, he was a key he put forward a key argument that tariffs won't necessarily cause persistent inflation. He's more worried about the economic ramifications from tariffs. So he's always been a proponent this year of cutting into this tariff policy. And that could be the key reason why Trump does have his eye on him as this Federal Reserve chair pick. The other thing that he has been a vocal critic of lately is the fact that he has been giving these vocal warnings about the weakening of the jobs market. And we saw kind of a reflection again of that yesterday in the weekly jobless claims. We saw a continued tick higher, and continuing claims are now at their highest since 2021. So this does back Waller's view that the labor market is beginning to flash red and it needs some sort of support in the effort of Fed rate cuts. That's also, that kind of sentiment has helped the dollar on this weakening track. It's now weakened for 6 straight days, Lizzie, the longest weakening streak since April. Now, this is, again, a key factor of having a more dovish member on the Federal Reserve, and perhaps promoting Waller to Fed chair is that you have a weaker dollar and lower front-end rates.
Okay, the dove vindicated again by the data. Bloomberg's Valerie Teitel, we thank you so much for walking us through all that. Now to the Middle East. The shekel is falling after Israel's Security Cabinet approved Prime Minister Benjamin Netanyahu's plans to take full control of Gaza City. The move is seen as a final push to topple Hamas and to end 22 months of fighting in Gaza. We can go now to Jerusalem and speak to Bloomberg's Dan Williams. Dan, good morning. Welcome to the programme. Just talk us through what the response has been, not just from Washington, but from the rest of the world as well.
It's early days now. I mean, early hours. This decision came out at 4 o'clock in the morning after a 10-hour closed-door session of Israel's Security Cabinet. That's effectively the war cabinet, the top decision-making body in this government. The decision is effectively to win, or at least begin the end of this war, as Israel would put it, by storming the remaining pockets of the Gaza Strip, some 25% of that territory that Israel has yet to conquer. Israel believes that that is where what remains of Hamas is holed up. Also, that's where the 50 hostages Hamas is still holding are being kept, which is why previously it avoided operating there. One can expect a great deal of consternation, certainly in Europe, certainly in the Middle East. There are many people, many parties, powers that had hoped to see this war end with a ceasefire, perhaps a protracted ceasefire, an open-ended one. However, the United States has given open and very voluble support to its Middle East ally. It says it will provide increased humanitarian aid while Israel conducts this escalation in fighting.
So we're a long way from that ceasefire that Western governments had been calling for and hoping for. If this proceeds as Netanyahu is planning, who's going to run Gaza?
Netanyahu has been, throughout this war, fairly vague, fairly sparing on the details. What he said in the statement after the Security Cabinet session today, in an interview with Fox News yesterday, that it would be an alternative government to Hamas, an Arab government, he called it, perhaps by Palestinians, perhaps by other Arab powers. His core conditions are that it not be Hamas and it not be the Palestinian Authority, which is the internationally backed Palestinian administration in the West Bank. That's the second Palestinian territory. So I'm not aware of many candidates lining up to take those reins. When you ask Israeli officials about this, they say they do have candidates. They can't disclose their names because as long as Hamas is intact, that would endanger those candidates. It's a bit of an Isha sketch in terms of determining what's true and what isn't, what will unfold and what won't. What's clear for now is that Israel intends to prevail militarily to crush what remains of Hamas. We're talking an estimated 20,000 fighters, 2 brigades strength in Gaza City and parts of central Gaza down the line. And after that is done, I imagine the Israelis will finally attend publicly to the issue of post-war governance.
OK. Dan Williams, we thank you so much for all of your coverage this week on this crucial issue. Really good to see you, Dan Williams. Now, let's take a look at what else we've got on the docket ahead today. At 12:15 p.m. London time, we're going to be hearing from the chief economist of the Bank of England, Hugh Pill, notably one of the dissenters yesterday in that vote for a hawkish cut. He was voting for a hold, so it's going to be really interesting to hear why he, alongside the other person responsible for the monetary policy report, the Deputy Governor Claire Lombardelli, went against the governor in this vote. So we look forward to hearing from him at just after lunchtime. Then a bit later, at 1:30 p.m. London time, we get the Canada jobs report. And then tomorrow, more of a read on the tariff picture. We will get the Chinese PPI and CPI numbers. So a busy weekend as well. But you can get a roundup of the stories that you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can find it by going to DAYB Go on the terminal. But coming up on the programme, Donald Trump says that he's very disappointed with Vladimir Putin, but he's willing to meet him even without the Ukrainian president. We'll bring you all the details of that potential meeting next. This is Bloomberg. Welcome back to to Bloomberg Daybreak Europe. It's just coming up to 6:17 a.m. here in London, and you're looking at oil heading for the biggest weekly loss since June, with traders judging that US efforts to end the war in Ukraine aren't going to impact supply. So you can see Brent there trading at $66 a barrel this Friday morning. President Trump saying that he's willing to meet with Vladimir Putin, even if the Russian leader has not yet agreed to also sit down with Ukraine's president. Now, Putin says that the conditions to meet with Vladimir Zelenskiy haven't yet been met. And when asked by reporters whether his Friday today deadline would hold, Trump said that he was very disappointed with Putin's behaviour and left open the possibility of additional penalties over the war in Ukraine.
Is your deadline still standing for Vladimir Putin to agree to a ceasefire tomorrow, or is that fluid now?
It's going to be up to him. We're going to see what he has to say. It's going to be up to him. Very disappointed.
For more, let's bring in Bloomberg's Tony Halpin out of Dubai. Morning, Tony. Happy Friday to you. We just heard from the president there. He says that he could meet Putin soon, even without Zelensky. Is that a sign of more capitulation to come from the US at this now bilateral meeting?
Yes, good morning. Well, this is the Kremlin's ideal scenario, that they want to get Putin in a room with Trump, essentially alone, without Zelensky, in order to influence the US on an outcome that will be favourable to Russia. And clearly, from a Ukrainian and European point of view, that would be very worrying indeed if Trump was willing to sit down with Putin to discuss an outcome in Ukraine that didn't include Ukraine, which of course is a very different position from his predecessor Joe Biden, who famously said, nothing about Ukraine without Ukraine. And in this situation, we'd have Putin and Trump sitting down together without Ukrainian presence, without a European presence to influence the US thinking, and Russia will be able to present its view of the war and the view of any settlement to that war. So that would be very much in Russia's interest.
Well, yeah, you wonder if he'll make this concession, whether what Trump would likely accept from Putin to drop secondary tariffs on buyers of Russian oil.
Yes, as you've noted, today is the deadline. President Trump was very clear on what Putin had to do in order to avoid secondary sanctions, which was to agree to a truce by August the 8th. There's no sign at all that the Kremlin is willing to announce a truce. And so far, at least, we believe that there's going to be a summit meeting between Trump and Putin without having first to concede such a truce. So it's very difficult in those circumstances for Ukraine and Europe to have confidence that Trump won't give away other things which they consider to be too much of a concession if he sits down with Mr. Putin without them present in the room.
And then we've had Putin and the special envoy Steve Witkoff also said to have discussed US-Russia relations at that meeting. How could they change?
Yes, I mean, the whole Russian idea has been to try and develop bilateral relations with the US separately from resolving the war in Ukraine. They don't think, in fact, that there is a resolution to the war which meets Russian demands, and they want to continue fighting. But they also want to develop a good relationship with Trump because they want to build business relationships with the US. And they see an opportunity to try and develop those bilateral relations separately with Trump and separately from any outcome in the war. And so again, the US, I think, is entering a potential meeting with the Russians with perhaps a different view of that. They might still be trying to connect an outcome that resolves the war in Ukraine to developing relations between the US and Russia. But Russia views it very differently. They see those as two separate tracks.
OK. Bloomberg's Tony Halpin out of Dubai. We thank you so much. Of course, energy emerging as a theme in many of the president's trade negotiations with other countries, not least with Japan and the EU. So we keep an eye on those talks. But coming up on this programme, the Bank of England cutting rates, but only after its first ever revote. We're going to hear from the Governor of the Bank of England, Andrew Bailey, next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:23 a.m. here in London. Now, yesterday, the Bank of England cut rates to their lowest level in 2 years after an unprecedented revote. The Monetary Policy Committee was deadlocked on its decision, forcing members to vote again for the first time ever. The Governor, Andrew Bailey, has told Bloomberg that that reflected just how finely balanced the situation is. And he was speaking to our very own Francine Lacqua.
We've actually never had to be in this situation of having to have two votes to produce the majority. Absolutely fine, we can do that. Not difficult. But again, I think it's a reflection of just how finely balanced the situation. So my message to markets is that this is a very finely balanced situation.
But finely balanced or complicated?
Well, I think it's finely balanced. I mean, you might say that there's a lot of things going on under the surface in terms of influences on it, but it is finely balanced.
Investors or markets are pushing back almost to actually no cuts this year. Could that make sense to you?
Well, I think the fact that pricing is now, more sort of 50-50 going forwards, I think is a reflection of the fine balance. So that doesn't surprise me.
But you're happy with that? There's no.
Well, I try to avoid pronouncing in that's a slightly sort of grand scale. But I think if we say something is finely balanced, I'm not surprised when you see that outcome. Perhaps that's the best way I can put it.
Governor, when you look at the cycle, are we starting to approach the end of the easing cycle?
I think the path is still downwards, and over time, I think there's more uncertainty about the sort of step by step, exactly when the steps are taken. Put it that way.
Are you expecting a stabilization when it comes to the labour market? I mean, was April the worst of it because of some of the things that the government put in place?
Well, what we've seen since May, when we did the last monetary policy report, is we actually haven't seen a lot of news on activity and the outlook for activity. What we have seen is actually pay increases come in a bit below where we thought they would be. Now, given that we were starting from a level where they were considerably above, obviously any level that's consistent with the inflation target, the fact that that is happening obviously is welcome news. But that's the context in which a good part of the context in which we have to reach the judgment.
So how do you look at the labour market over the next couple of months?
Well, we think, interestingly, our agents around the country they do an annual pay settlement survey at the beginning of the year. So at the beginning of this year, they said they thought it would come in around about 3.7 as the sort of the middle of it, and we think it's actually pretty much on course for that.
Inflation. Talk to me about inflation and the possibility of second round effects, given all of the tariff turmoil that we're seeing in August.
So. Yes, I mean, there's obviously a vast amount of news being generated in the world economy at the moment, and we have to factor all of that in. However, having said that, actually, in our deliberations, I can say to you that actually it was the domestic situation that was more important. Now, that's not because I'm in any sense relaxed, in any sense dismissing the whole tariff issue. It's important, and by the way, I mean, we've obviously had the news that we've had since May means that the sort of average tariff level's a bit lower than we thought it would be in May, but it's still well above, obviously, where it's been in history.
The Bank of England Governor Andrew Bailey there speaking to Francine Lacqua. But it wasn't all about the rate decision. It was also about quantitative tightening. The Bank of England also warning that its long-dated bond sales could amplify strains in part of the gilt market. Now, that warning could be a hint that it may be, and then maybe a need to slow the pace of its balance sheet runoff. And analysts say that the comments cement the expectations for a reduced QT target. Of course, the decision coming on that next month, but coming up right here on Bloomberg Daybreak Europe, we're going to discuss whether an ultimatum from Donald Trump can really bring Vladimir Putin to the negotiating table. That conversation next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Japan leads a rally in Asian stocks as its chief trade negotiator says that US tariffs will not be stacked. Gold spikes in New York on a Financial Times report that bullion is set to be hit with import levies. Elsewhere, Israel's military prepares to storm Gaza City after a 10-hour cabinet session approves plans for a full takeover. And Donald Trump says that he's willing to meet Vladimir Putin even without the leader of Ukraine. Oil heads for its biggest weekly loss since June. Well, a very good morning. Welcome to the programme. If you're just joining us, it's just gone 6:30 a.m. here in London, and you're looking at futures pointing higher both in the US and in Europe as we head towards the cash session. The equity rally stateside taking a breather yesterday, but it's still floating around record highs when you look at the futures picture. But when you look at the bottom of that screen at the Nikkei 225, you can see the optimism reflected on those US-Japan trade talks, the chief negotiator from Tokyo heading over, and we have Asian stocks in general set for a fifth straight day of gains, so really boosted by the Nikkei 225. Flipping over to the cross-asset picture, and you've got the two-year yield, I think, pretty steady as things stand at 373. We've got an eye on the pound, of course, because we had that hawkish cut from the Bank of England yesterday, but 134 is where we trade right now, so weaker a touch after the lift yesterday, but really not too far from where we were before the decision. Oil headed for its biggest weekly loss since June, as I say, on tenterhooks ahead of that Trump-Putin meeting, and we'll dive into that again in just a moment. But then in terms of gold, you're looking at spot gold down and gold futures up, and this divergence comes down to an FT report that Swiss gold bars are going to face US tariffs, so the nightmare continuing for President Keller-Sutter. But let's get back into the geopolitics. US President Donald Trump saying that he is going to meet with Vladimir Putin, even if the Russian leader says that he isn't going to sit down with the Ukrainian counterpart, Volodymyr Zelenskiy. Now, the White House deadline for a Moscow ceasefire to show progress towards ending the war in Ukraine or suffer additional economic sanctions expires today. So with me to discuss is Kristin Bakke, who is Professor of Political Science and International Relations over at UCL, University College London. Really good to have you with me this morning. Thank you so much for joining me around the desk. Look, we've got Trump saying that he could meet Putin without Zelensky. I was talking to Tony Halpin about this earlier. Has Putin already won before this meeting's even taken place?
Well, I think that's a good question. I think whether we're going to see a ceasefire today or, after this meeting that's going to take place is really unclear. I wouldn't bet on it.
What I'm asking is, can there be meaningful progress towards peace without Ukraine at the table? Tony reminded us of the Biden doctrine on this.
Yeah. So Zelensky has quite rightly said that Putin tends to use these talks of peace to try to, postpone things, to postpone sanctions and drag the war out. And I do think it's difficult to imagine meaningful talks about peace without Ukraine, particularly given the very uncompromising and maximalist demands that Putin has been raising throughout this process.
So Trump needs a win here. What is the lowest cost headline that Trump could walk away with to still frame this as a breakthrough?
Well, he threatened these sanctions, right? And the deadline is today. That if you don't agree to a ceasefire, these quite punitive sanctions, or at least they are meant to be punitive sanctions, are going to kick in. I think it's a question whether that's going to happen, and if it doesn't happen, that might look like here was a threat that wasn't followed through, which is not necessarily making the U.S. looking strong.
And he doesn't like taco, does he?
Right, exactly. I think he will try to frame the fact that there's going to be a meeting as a win, that is progress, but it is quite short of what. It falls short of, what he was expecting and what this threat was about, which was a full ceasefire by today. And that's not on the agenda. Putin has made his sort of vague statements about, a pause in long-range airstrikes, but not a full-fledged ceasefire, right?
Yeah, so do you think that Trump would accept that air truce in exchange for dropping secondary tariffs?
It's hard to see how, maybe your spin doctors or his spin doctors can, frame this as a win, but it's hard to say that is a full-on ceasefire if the ground offensive is continuing, and we know that attacks have been, continuing.
But if Trump doesn't raise the cost of war by implementing these secondary tariffs on buyers of Russian oil, would he have the leverage to end the war in terms of the military assistance that he's giving to Ukraine?
I mean, I think there are, right now Putin thinks he can win, right?
Yeah.
And that's not a position from which you're going to be negotiating either a ceasefire and certainly not, a deal, an actual agreement, or a deal as the language Trump is using. And the leverage that the U.S. has and also the West is twofold, right? One is to make Trump thinks that he's Putin thinks that he's not going to win. The resistance would have to be stronger. I mean, the Ukrainians have put up a formidable fight, but they need more support, and they would need more Western support. And the second thing that would be necessary is for Russia to start thinking that this war is becoming really costly economically, which is, of course, where sanctions are coming in. And what you would need are, wide-ranging sanctions, ideally coordinated internationally, for that.
So basically even more than is already being threatened.
Yeah.
Okay. The other thing that's interesting out of this is the US-Russia relationship that has been discussed apparently with Steve Witkoff, the US Special Envoy, that it could be redrawn in what we hear as a mutually beneficial way. I wonder what that looks like. Is it about energy cooperation, as we've seen in the US's other trade deals with other nations like, for example, Japan?
I mean, I think that's a good question. It's a bit speculative at the moment, I think, what that would be. I mean, I think the ultimate or the first thing that would change in the US-Russia relationship, if something were to come out of these talks, would obviously, or not obviously, it might be, an end to tariffs and a better sort of trading relationship that way. I think the hope, I think, when it comes to this promise or this fairly vague talk about a better US-Russia relationship, is to try to create a carrot and not just a stick to try to get to a deal. But I think it's very unclear what that carrot actually looks like.
Well, I wonder if a carrot to dangle at Putin would be a rollback of NATO expansion.
Yeah, but I think that's hard to. If you think about what Ukraine's demands are and what they're fighting for for their independence, to be, a sovereign state, to not have anyone else to dictate their policies, be those foreign policies or domestic policies. So Ukraine are not going to be particularly happy about anyone else telling them that, well, you cannot be a NATO member.
Yeah. Well, I wonder just if markets are underestimating the risks that whatever comes out of this is fragile, that it's this one-sided peace deal when we get there. You saw that rally into the idea of a Trump-Putin meeting. Is the market just being blindly optimistic here? Yeah,
I think there's unfounded optimism about this meeting, I think. I mean, peace processes are long, right? We're not going to get peace overnight. And the first thing, I mean, really, I think the only thing that might be on the agenda for this meeting that's coming up is a ceasefire. I mean, hopefully a full-fledged ceasefire, which is really about putting down the weapons. But at the moment, it looks like this might be only about a partial ceasefire, an air truce. Then it might be about what is the agenda for talks going forward going to be, right? Who's going to be at the table at those talks going forward? Obviously, Ukraine wants to be at the table, Europe wants to be, European states want to be at the table, and Ukraine wants European states at the table. So I think the meeting might be about setting the agenda. What are the things that will be discussed, right? What are the demands? What are Russia's demands? What are Ukraine's demands? What will be the agenda? I mean, I think that's what we can hope for from this meeting. I think that's a sort of best case scenario if there's an agreement even on those things.
You set a low bar, Kristin, talking, and meanwhile all of the fighting continuing. Yeah. Well, thank you for the analysis. Kristin Bakke, Professor of Political Science and International Relations at UCL. We thank you as we keep an eye on those talks. Now, we turn to Asia, where Japan's Prime Minister is facing a test in his bid to stay in power, with his Liberal Democratic Party holding a key meeting. Shigeru Ishiba has been clinging on to his job ever since he lost his majority in the upper house last month. And we can get more now with Bloomberg's Erika Yokoyama. Erika, good morning. Just talk us through the expected outcome of today's meeting. What's likely going to be the key talking points?
Sure. So the plenary session has just begun, but I don't think the session will lead to immediate resignation of Ishiba because session itself doesn't really have an authority to kick him out against his will. Instead, what I'm going to see is like the continuation of movement over the past few weeks after the loss in the election, which is like mounting pressure from within the party which has been building up since the election loss last month. So some lawmakers are calling for a major shake-up in the party leadership, especially, like Ishiba led. And the party experienced the major defeat in 3 consecutive elections. But, the problem hasn't stopped with the election, actually. Ishiba recently announced the policy shift, encouraging farmers to increase rice production that is moving away from existing policy to put the cap on production. Then that sudden change actually sparked the backlash from some LDP members who have a strong tie to the farming community as well. And, on top of that, the confusion over the U.S. trade deals just has added more fuel to anger for some LDP members, with Ishiba facing a mountain of issue on multiple fronts.
And you mentioned trade there, Erica. We've got the Nikkei 225 up 1.9% this morning on this optimism about that Washington meeting. Just talk us through what came out of it.
Sure. So, Ishiba actually has been saying he needs to stay in office because he needs to see how, whether the U.S. trade deal is actually implemented after all. Yesterday, just hours before the trade, the new tariff rates gets effective, discrepancy emerged between the two countries regarding understanding of the deal. According to the latest U.S. executive order, a 15% tariff was to be added on top of existing tariff, right? Which is contradicting Japan's earlier claims of exemption from such stacking. So Japan's chief negotiator Akazawa was in Washington to seek clarification. And after the meeting with U.S. counterparts, Akazawa told reporters this morning Japan time that U.S. confirmed to revise this executive order, eliminate the stacking, and also refund any overpaid tariff as well. And also, he confirmed about other pending issues of lowering auto tariff to 15%. However, it's still unclear when exactly these changes will take effect. So, with the economy feeling strained, pressure is mounting for swift and concrete action at the moment for both sides.
OK, well, we wait for the confirmation of all of that and the implementation as well as we look towards that make or break meeting for the PM. Erica, thank you so much for the analysis. Erica Yokoyama, so good to have you on the programme. Now, to our big take today, new regulations since the global financial crisis may have added as many as 51 million hours of annual financial paperwork for Wall Street. Perish the thought. The increased build-up has been called by JP Morgan's CEO Jamie Dimon a waste of time. And the estimate comes from new analysis by Bloomberg. As I say, it's the subject of today's big take. Let's get more now from Bloomberg's Laura Noonan, who co-wrote that story. Laura, we've talked a lot about tax cuts. We've talked a lot about tariff rises. But as more attention turns to this third leg of the Trumponomics stool, how risky is deregulation likely to be in the world of finance in particular?
Morning, Lizzie. Thank you for having me today. The question of how risky very much depends on who you ask. If you ask the regulators and even the industry, they will say, as you pointed out, Jamie said, a lot of this stuff is pointless, it's burdensome, taking it away is going to make the industry more efficient and it's not going to add risk. If you talk to people on the financial stability side, if you talk to former regulators, if you talk to some academics, they will say, listen, this could be hugely risky because if you do things like if you take away some of these checks and balances, the consequence is going to be more risk. And I think in the UK, a lot of the debate around financial regulation has been framed around risk. I mean, the FCA that has been saying we want to enable more risk in the system. So I think there is definitely a link between cutting back the rules and increasing the risk. There's a limited infinite number of things you can do which will cut back the rules and have no impact on risk. But that universe is limited. So it is really about finding the balancing act and deciding where you want that balance to be and how you see those trade-offs.
So to be clear, is the point really to burn the rule book, or is it more to just stop new rules being written?
You can go either way. So if you think about one of the things that the Trump administration has done in financial regulation, they have mandated 10 rules be cut for every new one introduced. That means you can either introduce one or you can cut 10. Now, realistically, some new rules will have to be introduced because there are some activities which are evolving, like, say, crypto payments. There are things we need to do there. The consequence of that, by that rule, is that you must cut quite a lot of rules. The US has already been cutting some rules. I mean, I'm not sure that 1 to 10 is going to be precise, but I think there's definitely are going to be some rules that are cut back. There's a lot of low-hanging fruit in the overlapping rules. So if you look at this piece we did, we also reproduced Jamie Dimon's famous spaghetti chart showing how lots of different agencies have overlapping responsibility for the same thing. And some of the low-hanging fruit will be if you have firms who have to provide essentially the same information but in slightly different ways to many different places. That is burdensome, that's a pain. I think you will see some of that fall back for sure. And some of the disclosures as well. I mean, you're familiar as well with some of these reports and some of these endless financial disclosures, which realistically very few people read. So it can be hard to say, okay, what is the real benefit of those? I think we will definitely see some rules taken away, and there will be a very high bar in terms of introducing new regulations, certainly during this administration.
All right, well, it's a fantastic read on the terminal. Bloomberg's Laura Noonan, we thank you for bringing it to us. Today's big take. I think that's a guitar that I can see in the background of your shot. You know the rule, Laura. If you're going to come on the programme, you've got to play it for us. But we'll leave that to your next appearance. Coming up right here on Daybreak Europe, how one mistake cost Samsung the tech crown. We'll bring you details on what that was next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, for decades, Samsung was the world's leading memory chip maker, but the tech giant was recently surpassed by smaller rival SK Hynix. Now, Bloomberg Originals has been looking at how South Korea's biggest company can get back into the AI race.
When you're out shopping for 7-megawatt offshore wind turbines, you think Samsung, right? Well, probably not. The brand is much more famous for its phones and flat screens. But arguably, the most important drivers of South Korea's biggest family business are these things. And for the first time in decades, the company's got a massive problem here.
Samsung is under assault from all sides, and they are getting stretched thin.
Samsung is in this position of playing catch-up, and that's difficult to do if you don't have growing revenue, if you don't have expanding profitability.
And unfortunately,
the chip profits tumbled. Big disappointment. The semiconductor division reporting operating profit of 400 billion won. Totally missed analyst projections for 2.73 trillion.
Samsung shares have whipsawed in value since their 2020 peak and tanked in 2024, while long-standing rival SK Hynix surged. The crisis is easy to miss amid all this.
The Ultra experience is ready to unfold.
But behind the cats and choreography, Samsung's hidden struggle threatens its national identity amongst a population that relies on it like no other.
It is probably the most influential company in Korea because of the importance to the economy.
And maintaining that influence may hinge on a piece of technology you probably own but have never even seen.
And subscribers can watch that documentary right now on the terminal and at Bloomberg.com and on the Bloomberg Originals YouTube channel from tomorrow. Now, to some other stories making news around the world this morning. Bloomberg understands that Saudi Arabia's Crown Prince is planning to travel to Washington in November to meet with President Trump. The US administration extended the invitation during Donald Trump's trip to the Middle East in May, with investment pledges expected to be finalized during that visit. Elsewhere, OpenAI is rolling out the more powerful and long-awaited GPT-5, vying to stay ahead of increased competition from rivals in the US and China. GPT-5 is designed to be more capable of coding and creative writing, as well as reasoning through complex queries. It'll be available to all free users and many of its paid ChatGPT subscribers as well. The OpenAI COO Brad Lightcap will be, of course, on Bloomberg Tech tomorrow at 4:30 p.m. London time. Later today, I should say, so you do not want to miss that conversation. We've got plenty more coming up on the programme, all the charts you need to set up your trading day. So stay with us. This is Bloomberg.
In 2019, the president contacted me and said, would you serve? And I said, yes. If the president contacted me and said, I want you to serve, I would do it. But he's not contacting me.
What say if he does?
If he says, Chris, I want you to do the job, I'll say yes. But he's not talking to me, so that's it. It's a hypothetical.
The man emerging as the favourite to become the next Fed chair, Christopher Waller, there speaking to Bloomberg last month. And you can see how the bets have spiked that he is going to be replacing Fed chair Jerome Powell, but not for a while yet. We've got Miran to take Adriana Kugler's place for now. But it's not the only central bank serving up the drama, the Fed. It's also the Bank of England. So flip the board over. We had that hawkish cut yesterday. The cut not so much of a surprise, but the drama coming from that surprise vote split, the first recast vote in the panel's 28-year history. And you can see here, originally it was a three-way vote split, 4-4-1, but they managed to persuade Alan Taylor to switch his dovish 50 basis point cut vote to a 25 basis point cut vote to get that majority that they needed. The other thing that they did yesterday was upgrade the inflation forecast. So flip the board over to that. You can see in the short term, they've increased it from seeing 3.5% to 3.8% for the third quarter of 2025. This is the difficulty. That emphasis on inflation is what pushed the pound higher yesterday, as well as that hawkish vote split. And this is the concern for many on the committee, because it links to food price inflation, because that is so prominent in the minds of consumers. Are wages and prices going to spiral? We'll be hearing from the chief economist of the Bank of England, Hugh Pill, one of the votes to hold yesterday, later today. That's at 12:15 p.m. London time. Be interesting to see what he has to say, as the odds of a November cut are looking at 50-50, despite them continuing that guidance that the path ahead is going to be gradual and careful. But now, the next edition of Bloomberg Tech Europe airs next week. That's it for Daybreak Europe. But do join Tom McKenzie for that, as he explores how AI is changing the way that we work. That's at 6:30 a.m. London time next Friday. The opening trade is up next. This is Bloomberg.